Are you ready for a complete overhaul of India's income tax system? The new Income Tax Bill 2025 is here, aiming to simplify rules that have been in place for over 6 decades. But what exactly is changing and how will it impact you? Stay with us as we break it all down, short, sharp, and to the point. The Income Tax Bill 2025, introduced in the Lok Sabha, is designed to simplify and modernize India's direct taxation system. The existing Income Tax Act has been in place since 1961, and over the years it has become cluttered with amendments, complicated clauses, and outdated provisions. This new bill is a cleaner, more structured version of tax laws, removing obsolete sections, cutting down legal jargon, and presenting key tax details in an easy-to-read format. Once approved by Parliament, the new law is expected to take effect from April 1, 2026. The bill has 536 sections compared to 819 in the current Act. Word count has been cut by half from 5.12 lakh words to 2.60 lakhs. The number of chapters has been reduced from 47 to 23 for better clarity. A major improvement, more than 57 tables now organize critical taxpayer details like deductions, TDS, TCS rates, and exemptions compared to just 18 tables in the old Act. A significant shift in the new bill is replacing the term assessment year with tax year. Under the old system, your taxes for income earned in financial year 2024 to 2025 would be assessed in assessment year 25 to 26. This often confused taxpayers. Now the tax year will align with the financial year, making it simpler for everyone. For the first time, tax authorities will have the power to call for information from virtual digital spaces. This includes email servers, social media accounts, online trading and banking platforms, cloud storage, and digital applications. Essentially, if you have taxable income or transactions stored digitally, the tax department can now access this data during investigations. The new bill officially includes cryptocurrency as property under capital assets. This means crypto holdings will be taxed like traditional assets, just like real estate or gold. Any profits from selling crypto will incur capital gains tax. This change ensures that digital assets are fully regulated under tax laws. While the structure of the law is changing, one thing remains unchanged: the tax slabs and rates under the new tax regime. However, the bill does not include a table for the old tax regime's rates, signaling that the government is moving towards phasing it out. Additionally, salary deductions like standard deduction, gratuity, and leaving encashment will now be detailed in a clearer tabular format. The Dispute Resolution Panel will now follow a structured approach, clear guidelines on how decisions will be taken, transparent reasoning behind the tax dispute rulings. Meanwhile, outdated provisions like capital gains exemptions on pre-1992 property sales have been removed, along with redundant deductions. So what's next for the Income Tax Bill 2025? The bill will now be sent to a parliamentary committee for review. After this, the government will finalize any necessary amendments. Once approved, the rollout of the new tax law will be announced. This is part of the government's broader push for tax simplification and transparency, ensuring fewer legal loopholes and reducing disputes. India's tax system is getting its biggest revamp in decades, with clearer laws and fewer complexities. But how will these changes actually impact you? Stay tuned as we track the developments.